Welcome back, guys. Corey Smith here again, CoreFX, in the technical training room members area. Going over another important video here with you guys, another essential off the bat must-watch video, especially if you're going to be trading alongside of us here at CoreFX, and that is going to be order types for trading. So I'm sure you guys, some of you have experience with this, some of you are new to this. If you are experienced and you know all about order types and entry types, this isn't a necessary video. This is just to clarify how we send out these signal alerts, what the videos are going to entail, what the alerts are going to entail, what the terminology is when you hear us say pending stop order or stop loss, target, market order, anything like that. So just a quick little recap on the different types of orders in Forex trading, and a little bit of the terminology and how we're going to be using them so that you guys understand what to be looking for when you are trying to trade alongside of us. So as far as order types that we will be going over and that we will be needing to know here with Forex trading at CoreFX, you have a market order, a stop order, a limit order, a stop loss, and a take profit, right? So these are the categories I want to touch on. Now the targets and stops are stop orders as well, but they're a different type of order. So I want to cover all these in their own sense, and I'll switch over to the charts as well to show you guys a little bit of a visible, hands-on approach to what we mean by these order types and exactly what to be expecting from the alerts we send out. So starting with a market order. Market order is going to be your most common. This is going to be your one-click order entry. This is going to be when you have your trading platform up and you see the buy or sell button and you click it and you're immediately into a trade. This has its positives. This has its negatives. It is something that we won't be using often here with the trade alerts. Probably, I would say, very, very rarely will you ever see a market order be sent out. But sometimes you'll miss an alert and have to enter maybe with a market order. However, this is a quick little recap of what a market order is. So it's basically just a live order placed to be filled immediately once you click the button, whether it's a buy or a sell. And what it does is it takes the best price available in the market at the time and fills you. If this is a market order being placed around a very volatile news event or something of that nature, your entry could be pretty far off from when you click the button to when you actually get executed on your trade. But market order is going to be your most quick and fastest way into the trade, into the market. It's going to be one click fill to get you into the market at the best price. As soon as you click buy or sell, your trading platform sends your order for execution, and you're in, like I said. So this is a very simple concept, very easy to understand what a market order is. All it is you're buying or selling right then and there at that moment. If you go to a grocery store and you buy an orange right there from the market, that is buying an orange right there from the market. If you buy an orange online and you're buying it to pick it up next week, that would be more so of a pending order. But a market order is you're buying something right then and there, you're selling something right then and there. And right when you click the button to trade it, you're active, you're in the trade. So that is what a market order is. A stop order, on the other hand, is going to be a pending order. This is an order that you place in the market and you essentially are anticipating or waiting for price to reach a certain level. And then that is going to be your trigger, your confirmation to enter a trade. So that is what's going to push you in. As I say here, which means a certain price level must be broken before a trade is triggered for execution. So a buy stop order is a pending order placed to buy above the current market price. The asset's price must breach this level to enter a trigger. I'll go over that with you in a minute on the charts, but a sell stop order is a pending order placed below the current market price to sell an asset. The asset's price must breach this level for the trade to be triggered. So I like to think of stop orders just for clarity purposes. It also is how you use them, but just for clarity purposes, I like to think of them as breakout orders. It just helps you identify and associate more so with how these orders are used and what they're used for. So switching over to the charts here real quick to show you guys a visualization of these orders. So let's say we are trading this euro-dollar pair, right? If I wanted to go long on this pair, say I thought it was going to break out of this consolidation and continue higher, if I want to go long, but I wanted it to break above this range first, right? I wanted to break above this resistance up here to trigger me into the long. Then I would put a buy stop order here, right? So price is trading down here. A buy stop order is up here. It's above price, and it is pending. It's not filled immediately. If I wanted to trade it right now, I'd click buy right now. I would get into the trade, right? That would be a market order. This is a buy stop order. Price is above currently market trading prices, right? It's currently trading at 116.15. This stop would be up here at 116.25, so 10 pips above it, right? And what price needs to do is come up and breach our entry before we're triggered into the trade. And then once it breaks up above this level, then we are into the trade long, and that is our entry into the trade, right? Off of a buy stop order. Let's say we had the other idea and we wanted to short this trade and we wanted to play on the break of this support, right? We wanted to sell this pair short as soon as it broke support. Not right now, not before then, not anytime other than if and only if price is able to come down and break this support. So what we would do is put a sell stop order pending down here. And a sell stop is basically just an order pending down here waiting to sell X amount of lots. Again, you have to use your position size and risk management calculator to determine your exact entry lots, but you want to put your entry down here below price as a sell stop order, and you're only going to get entered into this trigger for a short if price is able to come down and break below this support zone here and trigger your trade into a sell stop short, right? So we have buy stops if we place it above current price to go long on an asset, and we have sell stops if we place it below current market price to go short on an asset. All in all, either way, these are pending orders and they want to be used as breakouts, right? So if price, you want to go long, you want price to break out long in the direction of where you're trading and to break out and continue in that direction. That is what stop order is. If we want a short breakout and we think price is going to sell off, we want to set our stop below that so that the breakout goes in the direction of our sell and continues in the direction of our sell, breaking out the way we want it to, going short. So that should clarify stop orders. Remember them to be affiliated with breakout style, breakout type trades. If your buy stop is being placed, it's above current price and you want it to break out long. If you have a sell stop, your price is going to be below current price. You want it to break out short, right? So just remember this terminology. Refer to this video if you're getting confused when we're calling out orders. If you see a buy stop order or you see, we put up a trade alert that's got a pending order, just know that this is what we're using. We're using stop orders when it's a pending order like that in a breakout direction. The other order type that we do have is limit order. This is what I like to refer to as more of the range-bound trades, right? So this is a little bit trickier of a concept to understand, but I'm going to go over it with you right here real quick, and you can refer back to this video whenever you need to clarify it. Limit orders are pending orders, just like stop orders we just went over, needing a certain price level to be reached before the trade is triggered for execution. So again, this is another trade type that you're not just clicking a button and you're into the trade. You're setting an entry at a certain level that you want price to reach before your trade becomes active. So a buy limit order is when you set a pending order to buy at price below where the market currently is trading. So if you think of that as opposed to the stop order, it's the opposite. A stop, we want to go up and above, break through, and continue going higher. A buy limit is when price is going to come down lower first and then trigger a buy to go long. So that is why this is more of a range bound. This is support and resistance type trading, right? You want to trade when support and resistance holds, then you're going to be using a buy limit when support is hit, and you're going to use a sell limit when resistance is hit. So a sell limit order is when you set a pending order to sell at a price above where the market's currently trading. So let me switch over to the charts to clarify this. Looking at this same euro dollar where our buy stop would be getting triggered soon. So let's say when price comes up and hits here, I want to be short, right? Let's say for some reason my trade plan calls for me to be short when price comes up and hits there. Okay, here we go. This is our short limit right here. So what I'm going to do is I'm going to put a sell limit up here. So I'm going to put a sell limit right here, which means it's above current price, but when the price comes up to it and touches it, I think this resistance going to hold. I want to sell at this limit and ride price down, right? So a limit order for a sell is going to be above where current price typically is. Range bound, think of it as range bound because we're going to hit the resistance or the support and then come back. Okay? We're not breaking out like a stop order would be. We're respecting the zone. So let's say we have a sell limit up here. Price comes up, hits our trigger. We're now triggered in for a short, and we want the trade to now reverse and go the opposite direction. So let's say now we wanted to do the opposite, but for a long. Let's say we wanted to go long on this pair when price came down and hit this bottom zone because we think the support's going to hold again for another touch, right? So what are we going to do? We're going to put a buy limit order down here at X price, and as soon as price comes down here to hit it, as soon as we have price make its way, if price makes it, if price doesn't make its way down, we never get triggered. If as soon as price comes down, hits our buy limit, we then want price to move higher and our buy to work out and our buy limit to be triggered to have us move into profit, right? So our buy limit for a buy order is going to be below where price is currently trading. We want price to retrace or fall lower down to hit our support wherever our limit entry is, and that's going to be our trigger to get into the trade long, and that's going to be our trigger that we want to enter us and trigger that execution. All right, so that should explain limit orders to you guys. There's tons of free content online for you guys, but I just want to give you a visual representation of it. I want you guys all on the same page and understanding with these alerts that are sent out what exactly we mean when you see these types of orders. So that's our limit order. Next order of business we have here is our stop loss. This is the most important type of order in trading. This is going to be what protects us and what stops our losses from really damaging us, right? So I'm sure all you guys have heard of stop losses before. If you haven't, I'll go over a little bit of basics with you here, but there's plenty of content you can find online for free. It protects you from risk and minimizes your losses. So anytime you ever go into a trade, you should have your stop loss predetermined before anything is said and done. Before you go into your trade, you should have it ready. What a stop loss is it's an order placed below a buy or above a sell to protect your account from excessive losses. Now let me show you what I mean by that. Let's go back to this example. Let's say we were taking this buy stop, right? We were taking this trade long as soon as this red line's hit. That's our buy stop order. Now let's say we have a stop loss below the, below this little swing point down here. Let's say that's our stop loss here, and then let's say we have a target up here. Now, what this stop loss does is it tells us, okay, I determined with my trading plan that if this breaks above this resistance, this is breaking out, right? And I want this to go long. So what that tells me is if price then comes back below it and reverses all the way back down below these prior candles support and breaks it, let's just say for example purposes, let's just say our stop's down here, right? So it's invalidated by breaking this whole zone, right? So what my strategy is telling me, if this breaks out, this is going to continue to move, right? That's going to break out in my direction and continue to move. Maybe it'll move like this, it won't move in a perfectly straight line, but my anticipation is price is going to break out and move. If it breaks out and does this, that's telling me I was wrong. I don't want to let it keep going against me, hope it turns around, hope it turns around, and lose my entire account. That's not what we want to happen, and that's what a lot of traders allow to happen. So what a stop loss does is allows us, before we get into a trade and before our emotions are on the table, to be like, okay, if price goes below this support, my analysis for this breakout being long is wrong, right? So I want to say mercy. I want to tap out. I want to give up what I lost there and call it a day, or call it a loss, and move on, right? I want to move on to the next opportunity because that trade was a loser. So what our stop loss is this protective order that we put down here to protect us for price going too much further against us and limit our losses to only here. This is the only amount of pips we're going to lose, is right here, because that is how we predetermine it beforehand, right? So that is essentially what the purpose of our stop loss is to protect us from losses and get us out when we are wrong as quickly and as pain-free as possible. So with the placement of it being above and below, we have buy orders. Our stop loss is below, obviously, because that's when it would reverse against us. And if we are selling down here, if this was our entry to sell, here's our entry to sell. This is going to be our stop loss up here, because then that is going to be where we are wrong if our analysis breaks. And again, this is all stuff that you have to determine with your strategy. You can use our analysis. Obviously, that is the purpose of this group. Use our analysis, our trade alerts to trade. Use our stop losses, targets, all that. Start developing your own plan, though. And this is how these stops and targets work, and this is how they're placed. And I'm really just going over this so you guys understand the concepts of these stop losses, entries, and all, so you understand when we send out our trade alerts to you. Okay, so the most important part of a stop loss, other than the fact that you have one, is that you place it, like I was just saying, where your analysis is wrong. So instead of not using proper risk management and taking this order long above here and having our stop loss down here, our stop loss is down here because trading a lot, and I have $1,000 in my account, and if it comes down and hits this, that'll mean I lost $600, and That's my mercy point. $600 in my account is the most I want to lose. That's not how you do this. That's not how you set a stop. That's not how you manage your risk. That is how you risk too much money and essentially blow up accounts. So what we want to do instead is use proper risk management. Okay, this is where I'm entering. I want to first, before I determine any value of money or position size or anything, want to determine where my trade analysis is wrong if this trade goes against me. So if this trade breaks out and triggers my long, at what point now would price reverse and tell me I'm wrong? Maybe you trade breakouts with really tight stops, right? Maybe you lose a bunch of these small false breaks, but when you get a big one, it's a huge winner, right? Maybe you have a really tight stop because once it breaks above this resistance, you don't think it's going to pull back under it. Or maybe you want to play, the prior candle before the breakout is your stop. Maybe you've tested and found out price doesn't typically come back and break below that candle after there's a legitimate breakout. Or maybe you just use prior structure and you want to use this whole support level here, and you think if price broke out above here, maybe it could come back into the range and wait before it breaks out again and gets the real breakout. But if it breaks out and then it reverses and turns back around, maybe that's a sign that your trade was wrong, and that's where you want to put your stop loss. So then what you do is you determine, okay, this is where my stop loss is going to be, 115.80. This is where my entry is going to be, 160.30. So it's going to be a 50 pip stop loss, right? So now you take 50 pips, you take your position size, you take the pair you're trading, you determine your risk percentage per trade, and that's where you come up with how big of a position you want to place on the trade. But the most important part of all this is your stop loss is placed where you are wrong in your analysis, not where you tap out from losing too much money, right? So that is hugely important, and the most important part of trading with a stop loss and trading risk management is that your stop is where you are wrong in your analysis. And that is where you will see all of our stop losses placed when you see our alert set. Every single stop loss we place is going to be where the trade would be invalid because it went against us and we don't think the setup is any longer good or true. So that is what we will be using our stop losses for, and that is what professional traders do. So you guys are on the same page with us. And again, this should be a predetermined level and never moved further from our entry. So if we had that same trade out here and we had entry here, stop down here, if price goes in our favor, yes, it is perfectly fine, normal, and proper to move our stop loss as price moves in our favor. However, if we get in this trade long and this trade turns around and starts to go against us and you see that you're losing money and you don't want to take the fact of losing and you don't want to close out of the trade and just accept the loss. So what are you going to do? You're going to move your stop loss further away because you still think it's got time to turn around. You're going to move it further away because you still think it's got time to turn around. What happens? Price falls all the way down. You end up losing 2, 3, 4, 5 times the amount of risk you wanted to. You blow your account. You lose X amount of dollars. And it's just a nightmare all around. When you set your stop loss at the initial point before you were in the trade, predetermined, you knew if price comes down here, you want to be out. You're fine with losing that $100 right now, right? That $1,000, whatever it is that your stop amount is. You're fine with it right now because you determined it was only 2% of your account and it was this many pips, and that's fine. But then once you're in the trade and you see the actual money going against you because in your mind, you never thought the trade would go against you before you took it. It was the best trade you ever made. Now it's going against you, and you see that money going away, and you just keep moving the stop further because you can't accept the loss now. That is what you cannot do. Once you put the stop loss there before you enter the trade, your emotions are not on the table. You have a clear thought process. You understand when price comes down here, I can live to trade another day if that stops me out. My risk is worth my reward, and if it doesn't work out, that's part of trading. I take the loss. That is what you need to do. You need to predetermine it, and you need to follow it once it is live. Hugely important when it comes to trading stop losses. All right, the other aspect of this is going to be our take profits, another pending type of order. Another extremely essential type of order in trading. You'll see our targets, TP1, target 1, however we name them, TP2, target 2, however you see them come up on our charts, targets and take profits are the same. This is where our winners are going in our favor, and we want to take money off the table, cash in some of our profits because that is the only way to get paid as a trader, and take some risk off the table with some profits getting cashed out. This is a pending order as well, only it's placed where our trade analysis is correct and we want to cash in some or all of our profits. Now, some of you could trade set it and forget it type of stop and targets, where you just let the trade play out. It either hits your full stop loss or hits your full target, and that's that. Some of you trade partial targets. Target 1, then you adjust the stop loss, take some profits off the table, trail to target 2. Maybe you have a set target 2, whatever it may be. Targets are essential and needed and need to be predetermined, just like stop losses are. Before you go into a trade, you need to have a set target, and you need to stand by it and not take your profits off the table until you hit it, right? Now, you are going to have to tweak your trading plan and style and all as you go and as you learn and as you prosper. Yes, that is something you will need to do to improve where you set those stop losses and take profits before you enter trades. But once you're in the trade, you have to listen to the take profit you set before you got into the trade, because that was the logical, rational you. Now that you're in the trade, you're the emotional, irrational self. So you need to listen to the rational self that made that target before you place the trade. And these targets that you will be trading alongside Savan and myself are going to be the rational ones that we pick. And I know you guys don't have to do too much thinking for finding these zones and all while you're learning and doing this. But again, you want to know what we are doing, how we are coming up with these zones, and why we are coming up with them. Take profits are placed above buy entries for longs and below sell entries for shorts. So I'll show you in the charts in a second here. But take profits are extremely important. You guys need to have them in your trading plan. You need to have them predetermined, and you need to follow them once you're live in your trade. So, euro dollar. We're taking it long here still off of this. We got our stop down here still, about a 50 pip stop. With this trade, when it goes long, let's say we're using support and resistance zones as our targets. So let's say we've got a 1 target here, and maybe we got a more long-term aggressive target up here. So this is going to be what price targets we're aiming for. So let's say price breaks out of here, moves up, and goes into our take profit 1. Take partial profits off the table. Now I take half my profits off the table. So when it hits here, I take half the position off. If it's a full standard lot, I take a 0.50, cash it out, close it out, and then trail the rest. Now, what I'll do oftentimes is I will adjust my stop loss up here to break even, or if break even is right on that breakout level, I'll go a little bit below it so that price can come back and retest if it has to. And then what we now have is half our trade is in cash profits, half our trade is still pending with the risk off the table. Now, price moves around, let's say it breaks back higher, goes back up, goes into here. Now we've hit our target 2. This is our second take profit up here. Now is when we close out the rest of our position, the entire position, and take it off the table. Now, some of you, what you might do is maybe you take out partial your profits here, and you don't have a second predetermined stop. Now maybe you trail it by 30 pips. And as price moves up 10 pips, the stop moves up 10 pips. Moves up another 10 pips, the stop moves up another 10 pips. And you trail your stop until it's manually just kicked out, like that, automatically. There are a number of different ways. Again, in the Core FX training course, I go over all the different styles of trading, all the different management techniques, all the different target finding ways and stop loss finding methods, and everything. But in here, we want you guys to trade alongside of us and learn as you go. So this is how we will identify these levels. This is how we will be doing it. This is what you will... This will hopefully make sense for you now when you see the charts and you see the targets laid out and the stop losses and the entries and all. This is what we are doing. We have our predetermined stops. We have our predetermined targets. We have our triggers and what is exactly going to enter us into a trade. And then we let our plan play out and we let ourselves become robots and just follow our plan and leave as much emotion off the table as we possibly can. All right? So that covers all of these slides, guys. This was the order types. And again, we have our market stop, limit, stop loss, and take profit orders. I hope you guys understand what this is coming from. Please reach out to me if you have any questions, if you want me to go into any depth, any detail, any further. We can do it in any of our webinars that we have. But I hope you guys are understanding these concepts. There are a lot of free content. There is a lot of free content out there on order types. So please reach out to me if you're struggling with this and you need more help. I will gladly help you out. But hopefully you understand what this is coming from and what this means and what these order types are and how to use them in your trading, because they are essential, especially the trading alongside us. All right, guys, so thank you very, 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 very much. I appreciate you guys sticking by and giving this a try, being members of the group here, trying to learn how to trade and make some money in the markets. So thank you guys very much. I appreciate it, and I will catch you in the next one.